Hello everyone, welcome to Trader DNA. In this video, I will show you how to use the Bollinger Bands indicator to capture high-accuracy trading signals in both the Forex and stock markets. After following this tutorial, you will be able to use the Bollinger Bands indicator with ease. Furthermore, you will discover that almost all trading signals generated by the Bollinger Bands have high accuracy. But before we begin, please click subscribe and turn on the notification bell so that you won't miss any of my latest videos. Without further ado, let's get started. How to use the Bollinger Bands indicator. Bollinger Bands is a technical indicator used to measure volatility and determine the direction of price movement trends. In addition to trend direction, this indicator is also helpful in identifying overbought and oversold conditions. One notable feature is that during sideways markets, prices tend to move between two bands. John Bollinger, a skilled trader, created this indicator back in 1980. Nowadays, it has gained immense popularity and is widely used in trading across various financial markets, including Forex and stocks. Elements of the Bollinger Bands indicator. The Bollinger Bands indicator consists of a simple moving average, or SMA, with two bands, one above and one below the SMA line. The upper band is called the upper Bollinger Band, and the lower band is called the lower Bollinger Band. The upper and lower bands are determined by adding and subtracting the SMA value with a standard deviation. The standard deviation measures volatility and how far prices can deviate from the true value. The formula is as follows. As it takes into account volatility measurement, both bands will move according to market conditions. Bollinger Bands can be found on most trading platforms, including TradingView, MetaTrader 4, and MetaTrader 5, with default parameters of SMA, 20 periods, and standard deviation 2. Once applied to the chart, Bollinger Bands will appear similar to this chart screenshot. Generally, the overbought condition is indicated when the price touches the upper band, but the closing price remains below it. On the other hand, the oversold condition is declared when the price touches the lower band, but closes above it. Bollinger Bands as volatility measures. The market's volatility is reflected in the width of the bands. When volatility is high, the distance between the bands widens. This usually occurs when the market transitions from a sideways condition to a trending condition. Conversely, low market volatility is evident when the distance between the bands narrows, typically happening when the market changes from a trending condition to a sideways one. Trending means that prices show a tendency to move in one direction, either upward or downward. On the other hand, sideways indicates that prices tend to move up and down within a limited range. Trading with Bollinger Bands in sideways markets. During sideways market conditions, opening a position, entry, can be done when the price has crossed the SMA 20 line, targeting the nearest band level. Here are the rules. First, if the price crosses above the SMA 20 level, enter the trade when the candle closes above the SMA 20, with the target to close the position when the price reaches the upper band. Second, if the price crosses below the SMA 20 level, enter the trade when the candle closes below the SMA 20, with the target to close the position when the price reaches the lower band. Here's another example. Just like the previous chart, Bollinger Bands indicate a sideways or ranging market. In this case, if the price crosses below the SMA 20 level, enter the trade when the candle closes below the SMA 20, with the target to close the position when the price reaches the lower band. If the price crosses above the SMA 20 level, enter the trade when the candle closes above the SMA 20, with the target to close the position when the price reaches the upper band. From this real-life example we've discussed, you should now have a clear understanding of what a sideways or ranging market means and how to execute proper open positions when such a situation occurs. Trading with Bollinger Bands in trending markets. Typically, the Bollinger Bands indicator is used for Forex and stock trading during sideways markets. However, it can also be utilized during trending markets, following these rules. First, a strong bullish signal occurs when the price breaks above the upper band and the closing price is outside of the band. However, this signal is considered valid only if there has been a prior bullish trend. The second confirmation is determined by the formation of the next candle. If the opening of the next candle is above the upper band, then a strong bullish trend has truly formed. Additionally, it's important to note that in trending conditions, both bands tend to widen. Second, a strong bearish signal occurs when the price breaks below the lower band and the closing price is outside of the band. Similar to strong bullish signals, this signal is considered valid only if there has been a prior bearish trend. The second confirmation is determined by the formation of the next candle. If the opening of the next candle is below the lower band, then a strong bearish trend has truly formed. Additionally, it's important to note that in trending conditions, both bands tend to widen. In this chart, the current market trend is bullish. Then, the price crossed above the upper band and closed outside of it. The opening price of the next bar stayed outside the upper band, and the gap between the two bands widened. Based on this signal, we can enter a buy position and set an exit level when a price action formation, indicating a trend reversal, is formed, or based on our individual risk-reward ratio. On the contrary, in this chart, the current market trend is bearish. Then, the price crossed below the lower band and closed outside of it. The opening price of the next bar remained outside the lower band, and the gap between the two bands increased. With this signal, we can enter a sell position and establish an exit level when a price action formation, indicating a trend reversal, is formed, or according to our individual risk-reward ratio. Now you've mastered the correct way of using Bollinger Bands, a technique unknown to most novice traders. Everything we discussed earlier represents the fundamental principles of Bollinger Bands that every beginner trader should grasp. By understanding these basic principles, we can develop a Bollinger Bands trading strategy that aligns with our needs and trading style. Therefore, let me introduce you to a Bollinger Bands indicator-based trading strategy called the Stochastic Bollinger Bands trading strategy. This strategy combines moving average, stochastic oscillator, and Bollinger Bands. The power of this strategy lies in its combination of Bollinger Bands' fundamental principles with the oversold and overbought signals of the stochastic oscillator. This blend provides us with trading signals that offer higher profitability and reliability. If you're interested in implementing this trading strategy, you can download it from the link in the description. Simply upload it to your chart and all the indicators will be automatically plotted for you. So, there's nothing to worry about. Grab the download link in the description and get started. So, by understanding everything we've discussed in this video, you are now a Bollinger Bands trader. As always, if you've learned something new or if you'd like to see more frequent videos, be sure to subscribe, click the notification bell, and give us a thumbs up to show your support. See you next time.